Hey guys, good afternoon. It is 3:17 p.m. on Saturday, April 27th, 2019. Hope everybody's doing well. Um, just going to make a brief video here, guys, regarding just what I see for an important risk event coming up next week. And I'll probably make some individual videos for the individual ones, but just a quick highlight because there are some pretty important things coming up. So starting out, so Sunday they have this Spanish parliamentary election for the Eurozone. Although they have this as red, I don't really foresee that that's going to really do much. The euro right now is really being driven by the ECB and by data, so I wouldn't worry too much about that. On Monday we have core PCE. Now, the PCE is price of goods and services purchased by consumers, excluding food and energy. So it's almost a little bit like a combination of inflation and consumer, retail sales, durable goods, inflation, GDP. And it is one that the Fed does look at, although they do have it as orange. It does have the potential to be an important one. Okay, so let's keep an eye on that. Personal spending probably won't do very much. So that's all coming out at the same time on Monday. And then Monday night during the Asian session, we have from New Zealand, we have the ANZ Business Confidence. And this definitely has potential to be important. As you know, I've been watching the videos. Um, the New Zealand dollar has been under a lot of pressure for two reasons. One, the RBNZ turned more dovish in their last monetary statement, and also their CPI data came out last week was poor. And so it's really been down ever since. Now, there was a little bit of buying taking place Thursday and Friday this week based on, I think, probably some just profit taking and short covering ahead of the weekend. But also because one of the RBNZ governors have come out and said, yeah, they weren't really too worried about the growth being what it was, and they still were pretty confident in how things were. But that certainly they are open to rate cuts, though. So it was, it took a little bit of the heat off the Kiwi, and we did see some profit taking and some rallying in the Kiwi. But overall, it hasn't changed, and we'll look at a chart or two here. Then on Tuesday, we have out of the Eurozone, we have flash GDP for Germany, Spain, and the Eurozone as a whole. And again, those are shown as orange here. But these could be important again, because just like the PMI numbers were last week, because the euro is very data dependent right now, and that's what the ECB is looking at. So any big misses or big beats on these is going to, because it's potentially because market moving. So I would definitely keep an eye on these. If they come out as expected, I wouldn't say we're probably going to see too much going on. They're not all that far off from where they were last time. Slightly better for Germany and across the Eurozone as a whole. So I would expect that it would take a pretty good deviation from these to create a move. And if they come out worse than expected, I think from a trading opportunity, that's probably the best case, because the euro has been under so much pressure. But if they're a big beat, then there could be at least a short-term buying opportunity. Also on Tuesday, Canadian GDP, definitely an important number. After we saw the Bank of Canada last week, strip out their language about having a bias to hike rates and basically taking a more neutral stance to maybe slightly dovish again. And they said in their statement they're going to be looking at data. So this is a red level event, GDP. So definitely will be important for the Canadian dollar on Tuesday. And then heading into the New York session, we have consumer confidence out of the U.S. dollar. I do think that Even though they show this as red, again, I think you need a pretty good deviation from what's expected. They are expecting it to be better, which is positive. And I think that if it comes out at this 126.2 or higher, it's going to support the dollar and continue to push it up. The dollar did take a little bit of a hit on Friday um, after the durable goods numbers came out. So we'll see. And then on Tuesday night, we have, again, more very important numbers out of New Zealand. This will be probably more important than this business confidence. Their employment numbers come out. And again, this is what the RBNZ is going to be looking at. I mean, they're going to be looking at what's the strength of employment. They did mention that in some of their recent comments, that this is something they're looking at too. So I do think that this is definitely one to keep an eye on. Both of these numbers, the unemployment rate and the actual job numbers. And they are expecting an improvement in both, an increase in employment, a decrease in the unemployment rate. And then on Wednesday, we've got FOMC, so always potential to be a big deal. This is Wednesday afternoon. Now, remember, guys, this is in the afternoon during the New York session, so liquidity tends to be a little thin this time of day. London is closed. We're heading into the mid-afternoon of the late New York session. So sometimes this you can get some exaggerated moves here, or you get a real volatile whipsawing around. So I think the best approach to this is to let the statement come out. They're not expected to change the rate. So again, it's as always with most of these currencies, it's going to be in the statement. And then we'll have a press conference on this one at 2:30, and we'll hear what they say. But really, I think the statement will really tell you what you need to know, and there'll be more to come, kind of previewing that. And I think that will set the stage for the dollar a little bit more going forward, although it might not be reflected on Wednesday because, again, it's happening during the late New York session when London's closed. There's just really not a lot going on. So I would say that whatever the effect of FOMC is going to be going forward, more than likely that would begin to show its head on Thursday, on the next day, once London reopens and during the crossover session when New York opens. And then Thursday we do have pound data. I'm going to skip this because I'm not really following the pound right now in light of Brexit. Generally, this would be very important information, but I'm going to just skip over that for now. New Zealand dollar, Aussie dollar, Thursday night we have during the agent session, we have building approvals. And again, it's they have it as red. I'm not sure exactly how much it will move things, but the RBA, as you know, more long-term fundamentally, is still pretty dovish. And so if this comes out, weak, then I would expect to see the Aussie continue under pressure. And they are expecting a decrease. They are expecting this to go down to negative 12.5. And so what this measures is change in the number of new building approvals issued. So they're expecting a decrease after a very good increase on the April 1st reading. So if this is a miss, especially if it's worse than 12.5, then expect the Aussie to continue to be pressured. If it's a big beat, then I think the Aussie will appreciate. So I'm going to look at chart patterns for that one. But normally I don't know how important this number would be, but I think in light of the Aussie right now, I would definitely keep an eye on it. So, and then last but not least, non-farm payroll on Friday during the early New York session, right at the beginning for the U.S. dollar. And again, the ones to always look at here mainly is the average hourly earnings, which they are expecting an increase, 0.3%. And the unemployment rate, they're expecting to stay the same. They're actually expecting a decrease in the number of jobs from 196,000 last month to 181,000. And usually the best trade for NFP is when you see all three of these numbers lined up. So in other words, if they're all, when it actually prints, they all print green right here, or they all print red. if you get a mishmash and you get one red, two green, one red, especially if, especially if like, average hourly earnings is green and unemployment rate is red, those two especially, um, that can really just end up causing a lot of whipsawing and a lot of indecision. And a lot of times what you end up having is just the market whipsawing around and ending up a couple hours later, pretty much unchanged from where it was when the news came out. So you really need to see a confluence of data, of these data points, and dig into the unemployment rate a little bit, and dig into the employment change number, like full time versus part time. I mean, you're going to get the headline number, but then you can dig into the breakdown of what this number ends up being. So, but again, I think, from my opinion, is the best trade is when these all line up together, whether they're all red or all green, all positive or all negative. And if there's a mishmash and there's indecision and there's conflict between them, then that's when you tend to see, big wicks, spike up, spike down, little small bodies of candles, and then, at the end of the day, it ends up settling back to where it started. So, that's how I view that. So that's just a quick overview, guys, without getting into anything specific with charts, but more to come. Again, if you look at the New Zealand dollar, I just want to just look at that. So again, the New Zealand has been under pressure here. This was, basically when the RBNZ may put out their really dovish statement a couple weeks ago. That was this candle right here. This is the daily chart, and then this was the CPI numbers, and it's just been kind of going down since. If you go down to the hourly chart, you see, we did catch a bid here, and this was like Thursday and Friday. But I do think that a lot of this is just profit taking, and I don't think nothing fundamentally has changed with the Aussie. So, kind of the same story. Here's the Kiwi Swiss, looks really impressive on the hourly chart to the upside, but I think we see it going down here. But this was the closing candle on Friday, so I don't really put any weight into this candle at all. We could see the market open, up here tomorrow. So this is just, very, very thin liquidity and people squaring before the weekend. You can't really go by that last candle. And it looks pretty much the same on the Kiwi Canadian, and I bet you Kiwi dollar, pretty much the same. Yep. So anyways, guys, again, bigger picture on the Kiwi has not changed. It's still bearish. I still would look to sell any rallies. As far as the news this week, especially if this business confidence comes out positive, I would look for the Kiwi maybe to go up and look at a selling opportunity, get a better price. The Kiwi employment news, this is one to be a little bit more careful with, because if it comes out much better than expected, and they are expecting an improvement here, you can see 0.5 versus 0.1 and 4.2 on the unemployment rate, so we're expecting improvement there. So what would be a great trade based to keep in line with the fundamentals is to see the unemployment numbers come out with a miss. So these are both red and both come out negative, under 0.5, and the unemployment rate tick up to over 4.2. I think that would create a great selling opportunity. If they're positive, I think it depends how positive they are. If they just come out as expected or maybe slightly better, you might see the Kiwi rally, but again, that could be more of a selling opportunity, although I'd be careful with that. But if they come out as expected and it rallies a little bit, I'd continue to look for a place to jump in and sell in that case. And if they come out negative, worse than expected, then I would probably just sell straight away, unless I see the end of a trend on an Elliott wave pattern. So anyway, I just wanted to look at that one, but that's all I'm going to do for now. Keep this short enough. All right. So that's it, guys. Hope you have a great weekend, and should be a decent trading week, a little bit more on the calendar than we've had the last 2 weeks. So that's it, guys. Have a great weekend. Make sure you like the video, comment, share it, subscribe to the channel on YouTube here if you're just finding it for the first time. And that's it. And I will talk to you all this coming week. Thanks.